The bulls are showcasing some fight going into an important event later tonight. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon and welcome back to you. And the Nifty at the highest point of the day. We take that considering the uncertainties that we are surrounded by currently and of course the sell-off that we had in yesterday's trading session.
Good afternoon, Hormas. Absolutely nothing to complain about if you're a bull, especially if your portfolio is packed with mid-caps. The mid-cap index up over 1% in today's trading session. Small cap index up 0.9%. It's an action-packed show. Let's start off with the top headlines. Stocks notched some gains after US President Donald Trump suggests he may go easier on tariffs to be announced today than earlier expected. Realty and consumer durable stocks gain, while utilities and energy drag. Mid-caps surge.
Central Bank and Punjab and Sindh Bank continue to remain under pressure after the lenders conclude their fundraising via the QIP. Central Bank is down another 10% in today's trade.
Wari and Premier Energy slip after Bernstein initiates coverage on the two stocks with an underweight rating. The brokerage cites the current market cycle, declining return expectations and rich valuations as the key downside triggers.
Dixon Technologies has seen a surge as well after Kotak believes that the company is a key beneficiary of the component PLI scheme. The brokerage forecasts healthy sales growth and profitability in the fourth quarter for EMS players.
Quest Corp gains in trade after the company announces April 15th as the record date for its demerger, which is set to create 3 listed entities. The resulting companies are expected to commence trading in the next 2 months.
Still continuing to remain around that 23,300 mark is the index, remaining around the highest point of the day. That's a positive that the bulls would like. Of course, the broader markets are doing even better in today's trading session. Of course, they did better in yesterday's trade as well by virtue of not falling as much as the Nifty did. The mid-cap index, as you can see, up 1.25% at the highest point of the day. The small-cap index too showcasing some green in today's trading session, and the advance declined firmly in favor of the advances. 0.9% higher for the small cap index, both of them at the highest point of the day. And as you mentioned, the advance decline, the line is only getting wider, and that is in favor of the advances, of course. But which are those advances that are leading the charge in the broader markets? Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. It's been such a roller coaster ride over the last 2 trading sessions. Yesterday, the markets were, of course, slower, and today they've seen a very strong recovery. And a trend that has been consistent is the outperformance of the mid-cap index. So let's look at some of the stocks that are actually contributing to this outperformance. The top gainers include DB Realty. That stock is seeing an uptick of almost 12%. Started at the day's lowest point, has now moved to the day's highest point. Kalyan Jewellers is one such at the counter, up 7.6%. Bombay Burma coming in focus again, up nearly 6%. And Sham Metallics is up nearly 5.5%. Apart from that, let's also look at the realty pack. Now, keep in mind that yesterday, the realty index was down and out in trade. In fact, it was the top sectoral loser, and today it reversed all of that and is, in fact, the top sectoral gainer today. Godrej Properties is contributing to the gains, up nearly 5%. So is Macrotech Developers, Prestige Estates, and Phoenix Mills are some other counters that are trading in the green. But apart from that, there are several newsmakers in trade today. Look at VMart Retail. They came out with their quarter 4 update. Koenix Microsystems secured an order, secured a coverage order. That stock has been locked in upper circuit, up 5%. CSB Bank too, a good operational update coming in from there, 4.7% higher. Bari Energies, Premier Energies on the back of that note from Bernstein, wherein they have initiated coverage with an underweight call. Both of these counters are seeing some bit of pressure. Lastly, let's also focus in on some stocks that are, bucking the trend, are declining in trade today. That includes Central Bank of India, down nearly 9.5%, has been the top sectoral loser. In fact, the top loser on the broader index as well. Fortis Healthcare down nearly 3.46%. RHI Magnesita and AstraZeneca too seeing very sharp cuts in trade today.
Thank you so much, Vamakshi, for joining us and giving us a sense of how exactly the market breadth is transpiring in the broader end of the market. So, well, it's now a good time to welcome Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon, Jay. Thank you so much for joining us. Well, it's a sharp bounce that we're seeing after yesterday's pullback. The Bank Nifty too, up almost 0.9%. So, your view both on the Nifty as well as the Bank Nifty?
Good afternoon to you, Vivek and Hormas. Well, I would say that, Vivek, the bounce back which we have seen coming in Nifty, until March, I would say was quite sharp, 1,800 points recovery, and definitely, 23,800 was a clear resistance, and Nifty has reversed from there. I mean, we have seen the profit booking coming from those levels. after 1800 points straight move in 14-15 trading sessions. So definitely, if technically we look at the markets, then there is a very high possibility that the markets, or probably Nifty is forming a right shoulder of an inverse head and shoulders pattern, which is a bullish reversal pattern, Vivek. And I would say that till 22,700, 750 range on Nifty is held, the probability of this, turning out to be a bullish reversal pattern is quite high. So whenever you get a breakout beyond 23,800, I think that would further confirm the upside. The better risk reward would be about 23,800, or once get a buying on dips opportunity near the range of 23,000 to 23,000 to 22,800 range. So, buy on dips, else, buy on the breakout. That would be a strategy on Nifty. And Bank Nifty relatively has outperformed the Nifty in the fall, in the bounce back as well. And I think the overall private sector bank setup, as well as the PSU bank setup, is looking absolutely bullish. So I'm more convinced on the BFSI segment overall as compared to the Nifty overall. So that's the outperformance there is likely to continue in the entire BFSI segment. Hence, I have two buy recommendation. One is from the BFSI segment only. That's on PNB housing. The kind of steps which RBI has been taking as far as the OMO purchase is concerned, I mean, definitely has got the positive, liquidity positive now as far as banking sector is concerned, and because of which I think PNB housing is likely to perform. One can see the levels of 945 to 970 on a medium-term perspective, at least, as far as the April series is concerned. On the downside, I believe 890 is a very crucial or critical support till those levels are held. PNB housing looks, or housing finance looks quite positive. Second buy recommendation is from Nifty India Tourism Index, which is quite up there. Was up yesterday as well, and I would say that among which from the FNO space, Indian hotels. This is one stock wherein we are seeing the long build-up happening again. So Indian hotels is likely to be continuing its upward journey at least till the levels of 860 to 880 in the near term. Till 810 levels are held. So here to the risk load is favorable for the longs. We have seen long build-up as well as the FI actions in last 2 to 3 quarters. If you see, I mean, the FI has increased their position from 24% to 27.5%. So this is one stock which has remained immune in the entire fall and is outperforming as well. So these are the two buy recommendations. Apart from which, as I said, I'm overweight on the BFSI sector overall as well as the cement space.
Interesting recommendations there from Jay, PNB Housing and Indian Hotels. Jay, thank you so much for sparing time joining us today this afternoon with your views on the index and specific stocks as well. A small programming note then from our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code now and submit your entries for the SME Champion Awards Season 2. We take a short break. The management of V2 Retail joins us on the other side. You would not want to miss out on that conversation. Stay tuned.
Baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
Welcome back to Midcap Radar. V2 Retail is at the upper circuit. This is following the company's Q4 business as well as operational update. To discuss this and the outlook going forward, we are now joined by Akash Agarwal, Whole-Time Director, V2 Retail. Thank you so much, Akash, for joining us. Well, whichever way we look at it, it's a very strong update that we received, especially as far as Q4 is concerned. And, it's also the end of FY25. In this particular quarter, are there any one-offs that aided the performance, especially, did you have any specific festival days that came in for the month of March? And SSSG, have you exceeded the target that you set for yourself at the start of FY25?
Hi, thanks for having me. So, yeah.
Akash, I think we have you on a patchy line. we'll just try reconnecting you on the line. Akash, we'll just try reconnecting on the line. It's a patchy line. Now, for our viewers, yeah, I think we have Akash back on the line. It was a bit of a patchy line. Akash, are you able to hear us clearly?
Yes, I can hear you. Hi,
Yeah.
thanks for having me.
Yeah, Akash, did you hear my question or do you want me to repeat it?
Yes, I heard your question. So yes, Eid last year was in April. So about 7 days of Eid sale transferred from Q1 to Q4 this year. So there is a slight, impact on the performance because of that. But we have continued a very strong momentum that we have shown over the last 6-7 quarters. And SSSG number of 24% and the SSSG number of 29% for the whole year has definitely exceeded our expectations, because after having such a high base of 31% SSSG last year, we forecasted and we predicted that we'll only do an SSSG of around 15%. But I think it's a testament to all the hard work that we've done on the supply chain, on the product, on data analytics, that we've been able to carry on the performance and the momentum. And hopefully it carries on in the future.
Akash, good afternoon. Thank you for joining in. The last time you spoke to us, you had mentioned that you are aiming for around about 50% in terms of revenue growth for FY26. You are targeting an SSSG of 15%. With the momentum that you are heading into for the new year, do you want to revisit those targets or you just want to stick to them on a conservative basis?
I think those are not conservative targets. I think they're bullish enough, because now we have reached a per square feet sale per month of more than 1,000. So the base has become quite high. So if we get a 10 to 15% SSSG on that, that really helps with the profitability. And now we've already opened 72 stores this year. So the next year, the plan is to grow revenues by around 50%. So 10 to 15% coming from SSSG from same stores, and the rest coming from new store additions.
Understood that. So Akash, what we want to understand is, as far as store addition count is concerned, as well as triple SG is concerned, on both of those parameters, you've actually managed to beat the guidance or the target that you had set for yourself at the start of FY25. Now, going into FY26, you've given us a sense, but also, number one, reiterate for the benefit of our viewers, your triple SG target, your top line target, as well as can we see an increase in margins?
So the store opening target for next year will be around 90 to 100 stores. And the SSSG target will be a double-digit SSSG. We are happy with 10 to 12% SSSG for next year, with a much better base than what we were at 2 years back. And the revenue targets, as I already mentioned, we want at least 50% revenue growth for next year. So these are the 3 targets for FY26.
Your plan. Is there a reversal in plan on opening any new manufacturing units? Because you had mentioned the last time that there are no such plans in the offing. So I'm assuming you're sticking to that as well.
Yes, there is no plan for more manufacturing units. In fact, the contribution from our own manufacturing has reduced from around 19% last year to less than 8% now. And it will keep reducing as we're increasing volumes, because we're not opening any new manufacturing facilities.
Now, going forward, Akash, give us a sense of the revenue mix that you're targeting, because we believe that an increase in realization should ideally drive an increase in margins. So going forward, how do you see menswear, women's wear? We also understand that you have kids. So what will be the ideal mix for you for FY26?
So menswear has been always the largest contributor to us in terms of sale. So menswear is around 42%, and women's wear and kids wear around 25% each. And the rest is lifestyle products and general merchandise. But we've seen in the last 2 years that women's wear has been the fastest growing category for us. So I think maybe, women's wear's contribution increases the most in the next 2 years, but it will remain primarily speaking, I think menswear will still continue to dominate in terms of proportion, and kids wear and women's wear will be very similar to each other.
What about geographies, Akash? You mentioned presence predominantly in the tier 2 and tier 3 areas. Is there an intention to head into the larger metros, say the likes of Mumbai or Delhi, or even some of the other metros across the country?
So even when we enter tier 1, it's very strategically located, the store, where there is more middle class population, where there are more migrant population, and because that is ultimately our target customer. So we already have about 10 stores in Delhi NCR, and some do better than national average. So, and we just opened our first store in Bangalore. So definitely tier 1 is also the target, but considering that we want to open 100 stores next year, 80% or more than 80% of the stores will be tier 2 or tier 3.
Akash, a couple of questions we request for a quick response. Number 1, capex targeted in FY26. Number 2, are you entering any new style or any new portfolios? And number 3, what has been the impact, if you could quantify it, from online retail?
Can you repeat the first question, please?
The capex that you have envisaged for FY26.
So for 100 stores, we would need about 110 crores of capex. So per store capex is around 1.1 crores. And talking about categories, what we've done is we've increased the width in each and every apparel category itself, because we want to have the leadership position in apparel, and apparel has always been our strength. So to give you an example, in men's denims, if we used to do only 3 different kinds of fits, now we're doing more than 7 fits. And similarly, if in women's tops, if we were doing only 20 different kinds of fabrics, now we've introduced 30 new fabrics. So what we're trying to do is we are trying to give maximum width and maximum number of options to the consumer in apparel. And if you talk about general merchandise, we have started a little bit of beauty and footwear, and we've got a very good response in these 2 categories. So these 2 categories will also be in our focus going forward in the next 2 to 3 years.
One final question from my end, Akash. Your sales per square foot, as you mentioned, has crossed 1,000 now. You have a high base as well. Do you see this sustaining? Say, are you envisaging a 10 to 15% growth, say for levels of 1,200 by the end of FY26?
So when you open a new store, the new store does about 20 to 25% less than your mature stores. So because we are opening 100 stores next year, we might not get a 10 to 15% PSF growth for the company. But if you just look at old stores, I think it should reach 1,200 mark, which was our next target, in 1.5 to 2 years.
Thank you so much, Akash, for joining in. V2 Retail today locked in the upper circuit, and this particular stock, as you can see in the last year, has gone up 4x. So it's been a significant outperformer. Wish you all the best, Akash, as you go into FY26. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. It's time for our special segment, Midcap Microscope, and Nigel is here to focus on a stock that has outperformed the broader markets and is also near its all-time highs. But the question remains, will the rally sustain? Nigel is here with more on this.
Welcome to Midcap Microscope. The stock on our radar today is Welspun Corp. Remember, the stock has outperformed the broader markets. But is this rally justified? Let's break it down for you. Welspun Corp is a leader in pipe solutions. That includes the large diameter pipes, the ductile iron pipes, and the stainless steel pipes as well. But they've also expanded into building products after acquiring Sensex. So now they're into the water storage tanks, and they're also foraying into plastic pipes too. What's encouraging is, despite the heavy capex that they've lined up over the last few years, they have kept their balance sheet lean by the operating cash flows as well as exited non-core businesses. And that's what's helped them turn from a net debt company. Currently, they're in a net cash position. For FY25, they have guided for an EBITDA of around 1,700 crore rupees. But there are various triggers in place which could help them scale up this EBITDA number. Trigger 1, their order book is at a massive 20,000 crore rupees. And guess what? 60% of it comes in from the US market. And that, remember, is a margin accretive business. In the past fiscal, this US business did not contribute much to the EBITDA number. Trigger 2, 1,600 crore rupee expansion has been announced in Saudi Arabia for LSAW and ductile iron pipes business. They've already signed an MOU with Saudi Aramco, and that's a big deal. And looking ahead, well, Welspun is launching its plastic pipes business in the first quarter of next fiscal. Peers in this space, well, they trade at very, very hefty valuations. So if they can scale up this business, there could be some serious value unlocking. Finally, the company is implementing a turnaround strategy for its subsidiary, Welspun Specialty Solutions. That's post its rights issue. And now they have a solid balance sheet and good order book visibility as well. This segment could meaningfully scale up for future growth. So while Welspun Corp appears to have a strong growth trajectory, there are some risks that investors should be mindful of. A significant portion of its revenue comes in from the large infrastructure projects in sectors such as oil and gas, water supply, and construction. For example, the National Gas Grid as well as the Jal Jeevan Mission. Any kind of delays, cancellations in these projects could impact the earnings. Also, the success of its plastic pipes business remains a little uncertain. If the product launch is not up to expectations, it could impact investor sentiment as well. Well, before we wind up, let's sum things up for you. Welspun Corp has a solid order book. They're expanding into high margin markets. They're also eyeing new business verticals. So it's well positioned. However, execution risk and external factors could weigh. Will the company capitalize, or is the market being overly optimistic? Let's stay tuned to this one.
Thank you so much, Nigel, for joining us and putting the microscope on Welspun Corp. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.